Good day, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon webinar series. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Dimitri, myself, or Market Chameleon are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. One last look at that disclaimer, and let's welcome Dimitri Pargamonik to the stage to talk about earnings implied moves. Welcome, D. How you doing?
Good morning, Will. How are you?
Good. Let me share your screen.
Okay.
All right, and we're ready to roll.
Yep. I'm gonna navigate to the earnings implied moves tool just so you guys have an idea what it looks like, and then we'll discuss it. And what we'll do is go to a stock symbol that has upcoming earnings. I think FedEx is supposed to report earnings, so let's go to FDX. It'll take us to the main FDX summary page, and on the left-hand side, we have a menu. Let's click on earnings, interactive charts under earnings. And I'm going to then click on this menu to minimize and expand our screen. And here we have a few metrics looking at historical earnings moves. And the top one here is this 5.5%. It shows us the average of all the implied moves based on option prices right before earnings were released. So that was 5.5%. So let's click on this. And when we click on it, it takes us to a new page. These are the historical implied moves. And these bars here, they represent the magnitude of the implied move based on those option prices. So the implied move is the magnitude of the move in either direction, up or down, based on the option straddle. And as you could see here, they're different from quarter to quarter. It looks like, if we look from the long term, they actually started to move higher as we moved more in time. So that dynamic has changed. And the idea here is to get a sense of how the options lined up historically before the announcement. And then we could compare it to where the options are now to see if we're on the high end or low end of those implied moves. And keep in mind, this does not include the actual move. This is looking at before the earnings were announced, how were those options priced? And here we get the average, 5.5%. This is the high and low range, so 17.8% up here, as low as 1.3%. And the median move is 5.1. So this dotted line here is the average, and this allows us to kind of see and eyeball how far away from the average typically the moves look, and if and do they, at least in the most recent history, you see they're above that average. It looks like but that average is also getting pulled down by these. So if we wanted to narrow this down to maybe more recent history, we could use these filters up top. Let's say we want to look just the last 4 years to see how these numbers change. Click on 4 years. Now we see, big difference. We have 7% was the average of all those observations, with a range of as high as 13.3, low 14.1. Median move, where half of them are above, half of them are below, is 7.1%, which now it looks like right now we're at 8.2%, looks closer to that average within the range, and we still have actually 2 days before the expected earnings announcement. So these options should probably reflect a little bit more premium because you have 2 days of trading, and anything could happen in those 2 days. The stock could move around still. So you got those 2 days of volatility plus the expected earnings coming up on September 18th. So if we wanted to go back, let's say and we wanted to now look at this observations, but based by quarter, because we see FedEx is reporting Q1, and maybe the data looks different for Q1 than other quarters. So let's put on Q1, and we see that this did change a little bit, 4.8%. And let's take it maybe to the last 4 years. So now we only have 4 observations. You could see average is 5.6 with max and min 7.3, min 4.6, median 5.3. So we're right now at 8.2 above that, but we also have those 2 days of trading ahead of the earnings announcement. So what I wanted to show here, and maybe, or let me show you one more thing here. This calculator here allows us to enter in a implied move, and then this will show us the percentile that implied move is relative to that historical data. So right now, it's just defaulted to where the straddle is priced currently 8.2%. So if it was the end of day today, right before earnings at 8.2%, this is in the 94th percentile, meaning 94% of all these historical observations are below 8.2%. So we could also narrow it to 6 years. So you can see it now changes because it's only looking at the data in the observations we have selected. So if, let's say, today was end of day right before earnings and it was at 7%, we could just click there and recalculate it, and that would show us that 58% of the implied moves were below, 42% above. So it's a quick way to use this tool and a calculator to take an implied earnings move and compare it to the historical observations to see if we're on the low end or the high end of the historical range. Are we near the average, and so forth. So Will, I'm going to stop right there and throw it back to you.
Yeah, Dee, that was great. Thanks for showing that to the Chameleon community. I'm wondering, with the commentary coming out of the White House about changing maybe how often earnings have to be released, how is this going to affect all these firms that have built their models around trading earnings quarterly? Is this going to be a big deal if it goes through, you think?
Yeah, that'll be interesting to see if they do change that. Will it add to volatility, perhaps around earnings, or maybe lower it? We don't know yet, but the idea, I guess, here is if you're giving more frequent updates, there's more certainty in between. Maybe that will, tend to maybe lower the impact or the volatility in between. If you expand it and, you have now, a buildup of more uncertainty over time, maybe the impact to the earnings potentially could be larger, but we don't know what will happen. Because also companies can, in between earnings, provide guidance. Make announcements. So it, it'll be interesting to see what the new rules are, and if that passes.
Yeah, no, that's really interesting. Jim says that's a great answer, D. That's it's going to be interesting to see if it works out. And I mean,
Yeah.
something was pushed this morning on usual whales, like it was being forced through the SEC now. I mean, I don't know how fast this moves, or if what the SEC needs to do to change these rules. They're also talking about moving the markets to trade 24 hours because they feel it should be the same as crypto, and that if you want to get out of a position, you should be able to get out of it, which is another dynamic change to the business, right? And how all the firms involved are going to have to participate, because you have to change how you man everything if you're doing it 24 hours, right? It's
actually in a legacy system like we have. Those changes are dramatic for lots of the institutions right now, where they only trade between regular trading hours. Their net asset values needs an official closing price. Like, how do you value a mutual fund, for example, or how do you redeem ETFs? And, there are lots of I would say processes that were designed specifically because of the way the system was set up initially. So once so what do you do now? Where you then switch off that system. And by the way, a lot of the SEC rules are based on those, as well.
Yeah.
Regular trading hours, you have after hours, pre-market, so it's actually a harder switch than one would think, just because of how right now a lot of the systems in place, a lot of the institutional trading in place is designed specifically because around
market's closed. Yeah.
Markets closed, market opening auction, closing auction, VWAP orders, all this stuff needs to get figured out. And I think that's probably one of the reasons we haven't just moved to 2020, because I think the technology is there, to go 24/7 trading. I don't think it's a question of, the technology aspect of it. It's more of like just the legacy system.
Very good discussion, D. Thanks for bringing this to the Chameleon community. Everyone appreciates and enjoys these webinars. So thanks for doing it, my friend. And we will see you tomorrow.
Thanks, everyone. Stay safe out there. Have a great trading day, and we hope to see you tomorrow.
All right, D. Great. We'll see you tomorrow, buddy. Bye. All right, everyone. Thanks for joining again another Chameleon webinar series. If anyone wasn't able to check out yesterday's webinar with Ryan from Options Robot, that is available on the Market Chameleon YouTube channel. So make sure you check out that. And that is something we are trying to do every trading day. Not every trading day, every trading week on Mondays. I am also going to show something for people who are joining us for the first time. Let me share my screen real quick so you can see. You can go on to Market Chameleon, and we have a 7-day free trial. It is right here in the upper right-hand corner, free trial. Click on that, and you'll have access to all the Chameleon tools for 7 trading days. If you're liking what you're seeing, please like and follow us on all the social platforms. If you're on YouTube, thumbs up like Jim and Swami say. That's always very helpful for us. Everyone have a great, safe trading day, and we will see you tomorrow.